In this section, we learn about income tax filing. Before we get to income tax filing, let's first understand what is a financial year and what is an assessment year. A financial year in India begins on the 1st of April and ends on the 31st March of the next year. So 12 months right from 1st April till 31st March is your financial year. The best way to understand assessment year is that this is the year in which your income for the previous financial year is assessed, right? Assessment year is the year in which your income is assessed of the previous financial year. Why is it important to learn this difference between financial year and assessment year? Is that usually when you file an income tax return, the tax department will always ask for the relevant assessment year. So remember not to make a mistake between assessment year and financial year. Assessment year is the financial year immediately following your financial year for which you are filing a return. Say if you are filing a return for financial year 17-18, then your assessment year will be 18-19, in which your income will be assessed. Now that we've understood financial year and assessment year, let's quickly go over what are the income tax return forms that you should know about. The Income Tax Department releases income tax returns forms for every financial year. To note that every year there may be some change in the forms, and therefore you have to be careful about which particular year you're filing for. To make sure that you're picking the correct form, the forms are usually based upon whether you are an individual or you are incorporated as a company. So you may have a different form if you are a company. Individuals may have a separate filing. Income tax return forms are also segregated based on the type of income. So if you have only salary income, then you can get away with ITR 1. If you have capital gains, then you may have to go to ITR 3. And if you own a house property or more than one house property, you may have to go to ITR 2. But like I said, these forms keep changing every year, so you have to make sure that you're picking up the right form. Now let's understand who should file an income tax return form. Indian tax laws say that if your total income, the 5 sources that we spoke about, if your total income is more than rupees 2.5 lakhs in a financial year, then you must file an income tax return. Now this return has to be filed whether or not you've paid any taxes. So deductions that we spoke about must only be claimed by filing an income tax return. So add up all the incomes you've earned, remove the deductions and check if you've crossed the 2.5 lakhs threshold. If yes, then you must file an income tax return. In some cases, filing an income tax return is mandatory. Say when you're seeking a refund, you can only do so while filing a tax return. Say if you're a company, every company must file a tax return. If you are somebody who owns foreign assets, say if you have a bank account in a foreign country, or if you have shares, or if you have any other sort of assets which are situated out of India, then you must file a tax return and make a disclosure of these assets and these bank accounts that you have, and you must also include the income that you've earned from them. So tax filing can be mandatory in some situations. To also note that now nearly everyone must file an online tax return. The paper returns have almost been done away with. So if your total income is in excess of rupees 5 lakhs, it is mandatory for you to file your returns online. There are many benefits to filing online, which is you make fewer errors, it's easy to correct your returns, and there is faster processing. So do make sure that you're doing your returns online. You can use any of the providers or you can use the Income Tax Department. Usually the due date for filing your tax returns is 31st July of the assessment year. If you file your returns on time, you do not have to pay a penalty, but if you go beyond the due date, you may have to pay certain penalties. So filing your tax returns by the due date, which is usually 31st of July of the assessment year, is very beneficial.